We're here on the dollar yen 60. I'm a little bit late to this trade. Only just getting around to doing my review, to be honest, but I'm long this flag pattern with an internal AB equals CD pattern with a long wicked candle as confirmation here that we're seeing rejection, and playing for that 127 fib extension. So let's do the high time frame analysis. This pair has been a bit of nothing, to be honest with you, a bit of nothing. We have been consolidating sideways. However, if we put a structure level on here, this area just here, which we can also see here, a little bit higher than that actually, and here as well, we have quite a key level here, a structure which we have not as yet come up to test. So I do believe the market can go higher. Let's remove this here on the 240. Really isn't a great deal, it's just junk, to be honest with you. Let's take a look at the 60. Now here on the 60 we had this trend, wasn't something I could get involved with like this, but really importantly, look at this directional move. Nothing but solid bullish candles, lots of momentum, and with it we violated 1, 2, 3 levels of structure, and we also violated this entire level just here as well. So if we're looking at that momentum carrying on, we can look at a flag pattern, and this is a 2-touch flag. So we have 1, 1, 2, 2. I need a minimum of a 38.2 fib for this to come into, and you can see we've come into a 50%. So let me just leave that 50% on there. I did mention this candle right here, this low test wicked candle. Wasn't a higher high, higher close, but this for me was an indication here there's buying pressure at that zone. Now if I put a structure level on right here, which is at the low of the candle, few things you want to be looking out for. We have this test here. I'm actually going to bring it a little bit lower. I'm going to bring it to the bottom of this wick just here, and if we look at this entire area of just junk, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, while it is nothing but a complete and utter mess of consolidation, the fact remains is that this is a key area where we've seen reversals through that consolidation. So if we bring back on the orders, I want to be an ATR below this low. Now I have only just got involved in this, so right there is where I want my stops, on ATR below the low. Why didn't that move? There we go, and I'm playing for a 127 fib extension. So let's bring over the fibs. I am front running by 2 pips. Doesn't look as though I've got my target in the right place just yet. Okay, so it's looking like this. So not a great reward to risk, but high probability trade nonetheless. 28 pips of risk here, looking for 35 pips. Also targets are within this structure level, so we're not playing beyond that level of structure. We're back for the update, currently 20 pips up now. Very importantly, what we have done is if we're structure traders, we're looking for a higher high, higher close above our most recent structure. That is exactly what we have. So the probability of this trade going on to win has as much confirmation as we will see now. So this is a case of sitting on our hands and doing nothing at all. I have checked that targets are in the right place. we're not shooting past structure. We're 2 pips before that 127 fib. There's no psychological numbers here. I am just going to wait for targets to be hit on this trade. Now at this point I would usually implement risk management, and so I would reduce down the risk to just below an ATR below the lows. The ATR is currently 13. About that headset fell off my head. 13, and I'm already 11 underneath it, something like that, so I cannot reduce down the risk on this trade, so I just have to wait for this thing to go and hit. We're back with 35 pips up. We are pushing higher towards those targets. I am now just 1 pip from correction. Targets hit plus 35 pips.